Let's get our market master in. Saurabh Mukherjea, CEO, Institutional Equities from Ambit Capital, has joined us. Saurabh, you couldn't have come at a more appropriate time because losing about 1% in the past half an hour of trade has clearly created jitters. So straight away, let me get you a question from our money control viewers who can ask you through the message board. This question, and a very pertinent one, comes from Abhishek Deshpande from Indore. And he is asking you, do you think the current fall in the market is a buying opportunity, keeping in mind, of course, the crisis in Iraq?
I think there's two ways to look at the market. One is obviously the overall Sensex, where we've been very forthcoming over the last 2 months that our target for the year remains 30,000. We do see the Sensex going to 30,000 over the remaining 9-10 months of the current fiscal. But the other way to look at it is, I think what this fall will do is it will demarcate the difference between fundamentally strong companies who have it in them to outperform through the year and the broken balance sheet plays who had a very good run over the last couple of months. And my sense is going forward, the broken balance sheet plays, low ROC, high beta stocks, they'll have a much tougher time outperforming going forward than they've had since the budget till now.
Saurabh, hi, good morning. Well, it's good to know at least that your long-term target stays intact. But how do you move on some of these sectors like coal and power? These two sectors in particular, because you're getting a sense that there are some big reforms coming in. But now in the shorter term, there's a bit of jitters on these stocks.
I think what you'll see between now and the budget, and I think especially the budget will be a big catalyst in this regard, is there'll be growing realization that there are certain sectors where the government is being able to make quite rapid progress on the reform front. I think coal and oil and gas I would put right at the top of that list, where you're seeing good progress in Delhi in sorting out our coal issues. It'll take time to sort it out, but you're seeing good progress. And I think you'll also see growing realization that power and banking are complex issues with conflicting interests on many different fronts. And hence the blueprint for a power sector revival, a blueprint for a banking sector revival will take that much longer to create. And hence visibility on recovering these sectors will be some time coming. And as that picture becomes clearer through the budget, I think you'll see coal and oil and gas stocks go on a much firmer footing in terms of a rally, and power and banking stocks, I think you'll see a bit of wobbliness there.
So you would still buy names like Coal India, some of the oil marketing companies, etc.?
I would say Coal India and ONGC. I think Coal India and ONGC are put right at the top of the list of companies who stand to benefit from the reforms that the NDA government is trying to push through. So aspects such as the 3 key railway lines for Coal India, the one in Odisha, Jharkhand, Chhattisgarh, those 3 railway lines, we're finally seeing some progress vis-a-vis ONGC. I think it's becoming clearer that the oil subsidy regime for the diesel, LPG, kerosene subsidy regime will be pulled back gradually over the next couple of years. That's very positive for ONGC. I think I would put those 2 right at the top of my list of big winners from reforms.
Okay. You were expressing your skepticism about quick reforms in banking and power. So how would you play it as an investor? Because the banking, for instance, is 30% of the Nifty itself. Do you avoid the PSU banks? Do you stick with the private sector banks?
I would say the way to look at banking is that there's clearly a desire to move forward. I think the PJ Nayak report is widely acknowledged as a path-breaking piece of work. The question is, how do you take something like the PJ Nayak report and turn it into an operational blueprint? And I think my sense is there'll be some private sector input into that. Perhaps the senior private sector banker will join the PMO as an advisor. But pending clarity on a blueprint for banking sector revival, I would much rather prefer to still go for decent PSUs which are available below book value. I would say something like a Bob is worth looking at, and top quality private sector names which are still available at sensible valuations. So say an ING Vashya, a City Union Bank, these are good banks, well-run banks, properly capitalized. I would prefer to look at those sorts of constructs in banking. Sensible PSUs available well below book value, and top quality private sector names to play a banking sector revival.
What could the base for this market look like? I mean, if things escalate further in Iraq and we see a lower level, what is the floor for this market now?
I mean, look, calling short-term market movements has never been our forte in Ambit. But my reckoning is that the main driver of the revival, which is the government's reform program, we'll get more visibility on that over the next 2 to 3 months. I think partly on the budget, whatever 7th, 8th July, partly I think in the Prime Minister's Independence Day speech on 15th August. I think as a result of that, it's very difficult to see this market slipping badly. Maybe you'll get a short-term pullback because of monsoons and Iraq and and so on, as you pointed out, but difficult to see fundamental reasons as to why someone would sell the Indian market heavily at this juncture. You're seeing the beginnings of a capex revival, you're seeing the beginnings of an industrial sector revival, capital raising is coming back. I think we'll see plenty of capital raising in the next 3 to 4 weeks. Given all that, it will be very, very strange to see the Indian market pull back by any more than, say, 2,000 points on the Sensex.
Okay. Well, what about some sectors that have, run with both the cyclicals and the defensives? For instance, autos. How would you play that space?
I think within autos, what's clear is that the 8GV space, we are finally seeing the first chinks of daylight in the 8GV space. Passenger vehicles, we saw the first proper positive print for, I think, 3 years. 8GV space, I think we're seeing little bit of positive.
What kind of vehicles are HGVs?
Heavy goods vehicles, heavy commercial vehicles.
So you're vindicated in a sense with Ashok Leyland, right? And the turnaround story.
I think it's come a long way. It's worked quite nicely over the last year for us. But my sense is there's more to come, both on TAMO and on Ashok Leyland. I think TAMO's case, the dealer checks that we're doing suggest that the first rays of optimism on the dealer front. Ashok Leyland announced that Sri Lankan order on Friday, the largest ever Sri Lankan order. But more fundamentally, if you look at the dealer interest in the space, CV dealers are finally having, I won't say a smile on their face, but the first signs that the clouds are about to break through here. Similarly, on the two-wheeler front, TVS Motors has been a company we've backed for a long time. I think there's plenty left in TVS Motors in the months ahead.
Okay. Well, what about the IT space? We saw some bit of defensive buying happening. Where do you stand on any of those IT, pharma, staples?
I think consistent with that take, that it's difficult to see a fundamental reason for selling the Indian market. I would flip it around on its head to say it's difficult to see a fundamental reason for buying Indian IT heavily at this juncture. I think HCL Tech remains the one IT company where we see a long-term buy case, a strong long-term buy case on HCL Tech. TCS has had a great run. It's a good company, but it's had a great run.
But you had strong views on Infosys. Now do you think it's turned the corner?
Difficult to make the call. I mean, we obviously have to give the new CEO the benefit of the doubt and let him settle in and see what he does. But the problems in Infosys are fairly deep-seated. We've been sellers for 3 years. At this point, pending further clarity on what Mr. Sikka will do, I'll prefer to remain a seller. And similarly, Wipro, I think fairly fundamental issues, difficult to see them resolved quickly.
You're a hard nut to crack, huh? You're still not going to give the green signal to Infosys despite some amount of good news that has come in. Okay, no problem. Be that as it may, we were just speaking with the Agri Minister of Gujarat and you're trying to figure out, what the new set of reforms would be in the agri space, pesticide space, anything that you look at?
So the 3 companies that we've had on our 10-bagger portfolio in the agri space for a long time has been Bayer Crop Sciences, which I think is probably the best agri play out there. $1.2 billion market cap, super company, great intellectual property. Kaveri Seeds, which has already had a tremendous run, and Pesticides India. Beyond that, I have to confess, agri plays, liquid agri plays are hard to find. I have very little doubt that over a 2-3 year horizon, there will be a sort of revolution in this space. But finding plays that investors can bet on with some liquidity out there is hard. And hence Bayer and Kaveri would be my default setting plays on the agri story.
All this should mean that you must have some buys in the NBFC space as well. I mean, CVs. You're speaking about agri lending as well.
I think the challenge in NBFC, Ratha, is my sense is in the next 2 to 3 months, we'll see another round of bank licensing. I think the finance minister said publicly, I think a couple of weeks ago, that 3 months hence we'll get another round of bank licenses. My hunch is that many of the large NBFCs will be given a window to become a bank in the coming round of licenses. What does it do to their financials, their ROEs in the years to come is a tough call. And hence, with the exception of, say, something like LIC Housing Finance, where we have a great deal of conviction in the story, low cost of funds, good business. With the exception of LIC Housing Finance, it's difficult for us to put a emphatic buy on any large NBFC.
Okay, you said ONGC and Coal India will be at the top rung of the ladder as far as reforms are concerned.
That's right.
What will be in the second rung of the ladder?
The second round of the ladder, you're looking at the PSU banking plays which haven't yet run up like a rocket. So I think Bank of Baroda, my hunch is that because of apprehensions about the coming chairman change, Bank of Baroda hasn't quite participated in the rally quite as much. My sense remains that this is probably the best of the PSUs in terms of asset quality, and hence the chairman change shouldn't be a big dampener. So Bob would be in the second rung play.
We're actually running out of time, not out of questions though, Saurabh. Pleasure speaking with you.
Thanks for that.
And taking us through what looks like a crucial moment for the markets, down about over 0.5% for the Sensex and the Nifty.